The IRS has some plans to end a major tax loophole for wealthy taxpayers. It could raise more than $50 billion in revenue over the next decade. With us right now, Monika Hengesbach. She's an enrolled agent, tax-saving expert, CEO at Decision Financial Services. Good morning, Monika.
Good morning. Thank you.
So tell us about the loophole and how they're planning on ending it.
So really what this loophole is, it's really, they call it a basis shifting in partnerships. And so, and what's happening is a lot of wealthy individuals are, for example, depreciating the same piece of equipment over and over again. For example, let's say you and I had a partnership. There was equipment that was fully depreciated in a partnership. I contribute land, which is a non-depreciable asset at a value of $9 million, but I bought it for $1 million. And now I've increased the partnership value of $8 million, which means that asset that was once depreciated can be redepreciated at the new value that I just contributed an asset back into the company to depreciate. So that's like $1 million a year just in depreciation expenses that these partnerships are able to do, and they do it over and over and over again.
So how are they actually going to shut this down? How are they going to prove that this partnership basis shifting isn't occurring?
So what they're going to do, or what they're talking about doing, is increasing audits. They want to make sure that, because one of the parts of this partnership basis is if someone sells to a related party, that's a big tax strategy, and they sell it for less than what it's worth, and then the company then sells for less than what it's worth. The government lost out on all these capital gains. So what they want to do is they want to go back in and audit these partnerships to determine whether they truly utilize it's a Section 754B code in the IRS to increase the value of the assets fairly.
Now, does the ending of this program require any additional approval from the president or anything else, or has it already basically been approved and it's going to happen?
From what I've read, it's basically been approved with the Internal Revenue Service and it's ready to go. It's all part of this additional money that President Biden gave to the Internal Revenue Service to increase its audits on wealthy individuals. I mean, recently in news, we just heard they collected over $1 billion in taxes from wealthy individuals that haven't filed taxes or evaded paying taxes for years. It's all part of that initiative.
And that was just from our co-host, Hal J. So that's, I'm just kidding. They didn't really get that much
broke.
from him.
Monika, okay,
You're broke.
I was going to say one real quick question. Is this going to affect middle America, middle class, myself, normal people, everyone in this room, in any way, shape, or form?
I believe it can have some trickling effects down to the middle class, particularly which of us that have partnerships maybe with our family. Family partnerships is a great tax strategy tool. And here we are, and we want to sell part of our assets to our children because they're in a lower tax bracket. So we do this basis shifting in this partnership. Well, that is what's being cracked down by the IRS. So, yes, it can have a trickle-down effect to the middle class, you and I, et cetera.
My kids are going to be so disappointed. Hey, Monika, thank you so much for joining us. Monika Hengesbach, CEO at Decision Financial Services. We appreciate your time this morning.
Thank you for having me.